In MoneyWatch, the Dow closed down more than 200 points for the day, capping off another difficult week on Wall Street. This is the second straight losing week during this Russia-Ukraine crisis.
The S&P 500 and the Nasdaq both fell to close the week. The Nasdaq is down more than 1%, and the S&P 500 dropped more than 0.5%.
Let's bring in Megan Greene. She is a senior fellow at Harvard Kennedy School and global chief economist for the Kroll Institute. Thanks for joining us. The stock market fell for a second consecutive week, as we mentioned. What are the biggest factors behind that?
So I think there are two main drivers of equity market moves over the past 2 weeks. One is, of course, the tensions between Russia and Ukraine and the potential implications for oil prices in particular, and also just general risk-off sentiment. The other one, which actually I think is probably the biggest driver overall, is the Fed. The Fed's taken a much more hawkish turn than most economists expected, suggesting we're going to see much more aggressive tightening than had been forecasted even just a month ago. And so that's causing big market moves, not just in equity markets, but also in terms of bond yields, which are creeping up.
How are the geopolitical tensions between the U.S., its allies, and Russia and Ukraine driving this market sell-off?
So the tensions between Russia and Ukraine have implications for energy prices, particularly in Europe. But of course, it's a global market for gas and oil. So that's also driving energy costs up in the U.S. a bit. And so that's one factor. But also there's a question about what the U.S. and our allies do if Russia does invade Ukraine. There's some really drastic options that could be on the table, like kicking Russia out of SWIFT, the communication system around our payments. I don't think that will be an option. I think what will end up happening is we'll end up just imposing more sanctions on Russia and on Russian companies. Russia is already a highly sanctioned economy, so actually imposing more sanctions are unlikely to change Russia's behavior or to really have huge implications for the U.S. economy, but it will impact Russia's economy, of course, and also a number of Central and Eastern European economies that are more tied into the Russian economy.
Do you think this is an overreaction by investors, or is this typically what happens when it comes to the markets factoring in those geopolitical events, those big macro events in the economy?
So I think it's a bit of an overreaction, though the implications for energy costs, again, particularly for Europe, are real. I think there are other things you can extrapolate from what happens with Russia and Ukraine and how we respond. It's no surprise that China's been flying into Taiwanese airspace, for example, as tensions have mounted between Russia and Ukraine. So depending on how the West responds, we could also see skirmishes in Taiwan. We could see skirmishes in the South China Sea. So there's more at stake than just what's going on between Russia and Ukraine here.
Wow, that's an interesting point, Megan. Thank you so much for bringing it all together for us. Megan Greene, thank you.